The US markets are entering a bit of a tricky period in the latter half of October, close to the election, but with enough else going on that it's unclear how much attention is being paid to the actual outcome of the vote. Last week was dominated early on by Trump's COVID-19 diagnosis, but less for what it meant for the election and more for its impact on a new stimulus package. His return to the White House appeared to remove an obstacle to getting a deal done, only for Trump himself to emerge as the blockade, halting negotiations in their tracks. After a major wobble, investors were reassured by the president's claims he would pass the package immediately if he won the election, while signalling a willingness to bail out US airlines, given the go-ahead for Nancy Pelosi and Stephen Mnuchin to continue their talks. The big news over the weekend was that Nancy Pelosi rejected the White House's improved offer of $1.8 trillion in stimulus, above the $1.6 trillion offered previously and far beyond the $1 trillion cap Republicans are seeking, but still below the $2.2 trillion package House Democrats have already passed. Pelosi described the process as one step forwards, two steps back, and the proposal is insufficient on how we honour workers, crush the virus, and put money in the pockets of workers. What is perhaps crucial for the markets, however, is that the Democrats and Treasury Secretary Stephen Mnuchin are back at the table. After Trump had halted talks when he returned from hospital last week, the proximity of the election and the review of Republican senators at the rejected White House offer was already excessive before negotiations continue about a potential higher deal. Still means it is perhaps unlikely that a deal will get done anytime soon, but it is nevertheless an improvement on what appeared to be the complete nixing of negotiations after Trump's hospital stay. In terms of the election, after the chaotic week, which has seen the debate schedule reduced to two meetings, not three, after Trump rejected a virtual face-off, Spreadex is offering Biden odds-on at 4-11 to win the election, with Trump at 2-1. Biden's then at an electoral college vote spread of 321 to 329, well ahead of the incumbent at 290-217. With Democrats at a total stakes won spread of 25.75 to 27.25 to Trump's 23.75 to 25.25. One would imagine the larger a Biden victory, the larger the subsequent stimulus package would be, meaning it is in investors' interest for those prices to strengthen in the favour of Joe Biden. They could continue to change depending on whether or not Trump pushes ahead with rallies in key states in the coming weeks and what the lay of the land is regarding the debates after October 22nd. And also the results of Joe Biden's town hall address this week, which is set to be shown on ABC News instead of the postponed debate. As for the economic calendar, after Columbus Day on Monday, there's inflation on Tuesday, PPI on Wednesday, jobless claims in the Philly Fed and Empire State manufacturing indices on Thursday, and then retail sales, consumer sentiment, and industrial production readings on Friday. The third quarter earnings season also gets underway sort of officially this week, with JP Morgan, Citigroup, Johnson & Johnson and Procter & Gamble all reporting on Tuesday, with then Bank of America and Goldman Sachs on Wednesday, and PayPal and Morgan Stanley on Thursday. How those third quarter results start coming in this week could also be an underlying factor in how the markets perform for the rest of the week, dependent, I guess, on how much the stimulus package news remains at the top of the order in terms of what investors are concerned about. You know, a good set of results broadly could help continue any recent gains, whilst if the tone is set for a weaker third quarter earnings season, then you could see confidence start to be undermined, as what is going to be as mentioned, an increasingly tricky situation anyway, as we draw closer to the election and the volatility that should cause.